Well, we've actually seen a relatively strong outperformance of small caps globally. If you look at the MSCI index as it relates to small caps, they're up about 35% in the last 6 to 12 months. What that is indicating, and if you go back to my previous answer, is that there's an increasing amount of enthusiasm and optimism that global economic growth is going to pick up in forward years. And there's been upgrades, little upgrades to consensus expectations for global economic growth going around here and there. So in that environment, that's a very good environment for investing in mid and small cap companies. And that's why you've seen already that big outperformance of small caps globally. On the other hand, in Australia, you've had the impact on our index of a large component of it being the small resources component massively underperforming, as we've seen so many small resource stocks deliver either production downgrades or disappointments in relation to commodity prices. So we're at actually a very interesting inflection point where relatively we're starting to probably look much more attractive, because we've actually been going down at that point in time where the rest of the world's been going up. So it might be a fertile ground for people to come back and reconsider, once all the dust settles around resources, investing in Aussie small caps. We're interested, from our investment perspective, in finding companies that have got a reasonable reserve life, that have got reasonable operating costs, and they sit in a space where even during a downturn they can still continue to generate cash. So companies like Western Areas, which despite a very, very poor nickel price are still scraping through, because when the nickel price turns, as hopefully it will when global economic conditions improve, they are well leveraged to that uptake, but they don't require capital in the interim to fund the losses that their competitors would otherwise be generating.